Markets are up again, but is the rally losing steam? Before we begin our analysis for this week, after the end of October 2025, here is an important disclaimer. Market returns are never guaranteed, but when you do the deep research, deep analysis like fundamental analysis and technical analysis, you do get an edge in the market, but risk management cannot be ignored. What we will cover. Today, we will quickly review the US stock market this week, S&P 500 and Nasdaq 100. Then look at the global markets, the market of the week, Japan's Nikkei 225, precious metal, market sentiments and volatility, and a short macro pulse. After that, we will move to the monthly and weekly charts to study price action, demand and supply zones. This will help you to make informed, learning-led decisions. And don't forget, every Saturday at 7:30 p.m. Eastern Time, we do this weekly outlook. Let's begin. US market this week. US markets closed the week in green. S&P 500 was up around 0.7%. Nasdaq 100 is stronger, up around 2%. Dow also positive, nearly 0.75%. Russell 2000 was the weak spot, down roughly 1.2%. What does this mean in simple words? The big tech heavy indices are still rising, but the broader market, smaller companies did not confirm the move. That's an early sign of exhaustion. Prices can go up while momentum quietly cools. We will show this clearly on the charts. Global markets this week. Globally, the picture is mixed. Japan's Nikkei 225 led with a strong jump of over 6%. UK's FTSE was modestly up. Germany's DAX and Hong Kong's Hang Seng slipped. India's Nifty 50 was slightly down. So Asia led, Europe lagged. This uneven performance again tells us to be selective and evidence-based. Market of the week. Nikkei 225 is our market of the week. Powerful weekly gain, strong momentum, and we will check if the rally is healthy or stressed when we go to the charts with monthly and weekly views. Precious metals this week. In precious metals, gold fell sharply this week, about 2.7%. While silver was basically flat. This suggests money may be rotating and the US dollar and yields are part of that story. Quick note for new learners. If you want to understand technical analysis step by step, moving averages, momentum, chart patterns, candlestick patterns, risk management, watch Zero to Hero English playlist on our main channel, D K Sinha. It's a beginner friendly and will help you to read markets with a confidence.
Let's start with this stock market 101 video.
Good idea. It covers the basics. Yes.
And then maybe the common mistakes one?
Yes. So we avoid those.
Market sentiment and volatility dashboard. Let us check sentiment. The fear and greed index sits in fear zone. Market momentum still shows S&P 500 above its medium-term moving averages, that is SMA 125. So momentum is positive, but put-call ratio is neutral. Not too fearful, not too greedy. VIX is around at the mid-teens and creeping up. In plain language, people are cautious. Momentum is still there, but the volatility is waking up. That is the combination often appears before a pullback or consolidation. Macro pulse, yields and tariffs. On macro side, US Treasury yields stayed elevated. The 10-year near the 4% plus zone, higher yields can pressure equity valuations. Also, tariffs could start showing up more in consumer prices during the holiday season. If inflation edges higher, the rate cut timeline can get pushed out. So the macro backdrop is uncertain which matches our exhaustion theme. All right, let us move to the charts for technical analysis. We will study monthly and weekly structure of S&P 500, Nasdaq 100 and the Nikkei 225, marking key demand and supply zones and checking the exhaustion candles or throwbacks. This is the monthly price chart of S&P 500 index. The month ended at 6,840.2, and that is how this index was higher by 2.27% on month basis. Now the price has gone parabolically higher. Now whether this correction will start or not, because pullback is a normal thing in markup phase of the market. Now look at the price action. This is the area where the price has taken support, and this was the range in which it was trading. This was the resistance. So there was a range breakout over here. If we measure the depth of this and project by using the Fibonacci expansion tool, 61.8% expansion level has been attained by S&P 500, which is existing over here. We can further check the expansion level by seeing the impulsive wave, the prior impulsive wave. If we measure and project on upside, what we can see, the price has attained 127.2% expansion level. So there is an evidence that the price is overextended by looking at the price action and a parabolic rise. At the same time, it has attained 61.8% expansion with respect to the range. At the same time, 127.2% expansion with respect to prior impulsive wave. So this is the time where the exhaustion might take place in the market and correction might start. Now look at the weekly price chart of S&P 500. What we can see on a week-on-week basis, although the market closed higher by 0.71%, but what kind of candlestick pattern you see? It is a gap up opening with a doji kind of formation or a spinning top kind of formation, which shows the indecisiveness in the market. Now this is the daily price chart. What we can see here, gap number 1, gap number 2. So this is the exhaustion gap. Where could be the potential support? You see, this was the area of resistance and there is an existence of a gap. So 6,700 to 6,750 is an important demand area in S&P 500. And in this demand area, there is an existence of EMA 21. If mean reversion takes place, price might correct to EMA 21. Now we refer to the monthly price chart of Nasdaq 100 index. The index finally closed at 25,858.13, and this is how this index was higher by 4.77%. So in the month of October, Nasdaq 100 outperformed S&P 500. Here too we can see the range in which it was trading and there was a breakout. If you just project using the Fibonacci expansion, it has also attained 61.8% expansion level. So the possibility of a pullback or a possibility of some kind of exhaustion or consolidation cannot be ruled out. Now look at the weekly price chart of Nasdaq 100. What we can see, it attained the level of 61.8% expansion level, and then there is a formation of shooting star. Although the index was higher by 1.97% this week, but there is a sign of rejection. Now this is the daily price chart of Nasdaq 100. Here too we can see the gap number 1, gap number 2, though obviously this was the gap which looks like a exhaustion gap, and it is further confirmed by a formation of a hanging man kind of candlestick pattern. So where is the support? This was the area of resistance. So 25,000 to 25,100 is the immediate demand area, which has a confluence of EMA 21 as well. So this gap is potentially the immediate demand area. Now let us look to the market of the week, that is Japan's 225 index, Nikkei 225. This is the monthly price chart. The index currently is trading at 52,411.35. So in the month of October itself, the index has given a return of 16.64%. It was trading in a rising price channel and now it has given a breakout of upper fiber of the rising price channel. Here too we can see the consolidation over here. If we project the range of this consolidation, 61.8% level has been attained, but there is an expansion in the price because it has broken out of the rising price channel. So upper fiber of this rising price channel will act as a dynamic support in Nikkei 225. Now this is the daily price chart of Nikkei 225 index. What we can see, the gap number 1, it has only one gap. So overall, even this index is trading an extended price level. EMA 21 is here. So it has a very good support. This gap will act as a support. So around 48,700 to 49,000 could be the immediate support area. If you look closely the price chart, the very behavior of the price action in Nikkei 225, it corrects and takes support at EMA 21 and EMA 21 is acting as a dynamic support. So currently EMA 21 is placed at 48,900. So that could potentially be the dynamic support in Nikkei 225. Conclusion. Key takeaways. US indices are up, but the broader market lack plus rising volatility suggests selective caution. Japan shows strong leadership. Watch if the momentum sustains or fades. Macro is not a tailwind yet. Yields are firm. Tariffs could lift the prices for consumers. If you found this useful, keep learning. Knowledge precedes wealth. Watch Zero to Hero English playlist on our D K Sinha main channel to master the basics right away. Learning never stops with D K Sinha. See you in the next Saturday, 7:30 p.m. Eastern Time.
Let's start with this stock market 101 video.
Good idea. It covers the basics.
Yeah.
Yes.
And then maybe the common mistakes one.
Yes.
Yeah.
So we avoid those.